Hey everyone, welcome back. So today's Tuesday. We're going to talk about, obviously, Bitcoin is the first thing we're going to talk about. We got a story on Bitcoin also on the expiry that's happening this Friday and what it could mean for Bitcoin going through this week. And we'll also take a look at the miners, see how they did today. It wasn't too bad of a day. It was a mixed day. Some miners were up, some miners were down. But we'll also take a look at Mawson. I have some concerns for them, and we'll take a look at the Q2 results as well. So we'll take a look at that. And we got a hot 8 news, so we're going to get into it really quick after we get through everything else, and we'll call it a day. So, as always, I'm investing in following coins and companies for entertainment only, not financial advice. Do your own research. You guys know the drill here. And let's get into the markets here really quick, look at those. And the markets were down today. Nasdaq was pretty much flat. Dow Jones was down 0.5%. S&P was down 0.22%. So not as bad as it was yesterday or on Friday, but it is obviously still in the red. So markets are a little shaken right now. They don't know what's going on, is what's going to happen with obviously Fed Powell on Friday talking about it. And we'll go from there. Bitcoin right now is at 21,264. It was actually up today a little bit. Had a nice little green, obviously, candle here going up. We were obviously battling throughout the day a little bit, and now we're back down a little bit on the day. So we did finish up on the day, up 0.61%, which wasn't too bad. We closed at 21,528. And like I said, it looks like we're trading sideways right now. And then that's kind of the playbook for the rest of the week until we hear from Fed Powell on Friday. Ethereum right now is at 1,621. The same thing, pretty much flat the last couple of days here. Like I said, the same thing's going to probably happen throughout the week into the Friday. And then Friday's going to be either an explosive day, up or down. We'll have to wait and see, I guess, what happens on Friday. So that's it for Ethereum and Bitcoin. Let's take a look at the miners here really quick as well. So Annie was up today 0.86% to 65 cents. Argo was up 2.47% to 46 cents. Bit Digital was up 2% to $1.53. Bitfarms was up 5.07% to $1.45. CleanSpark was up 0.93% to $4.35. Cores was up 4.92 to $2.56. Digihost was up Digihost was down 6.2% to 97 cents. DMG was up 4.17% to 25 cents. GreenEdge was down 3.14% to $2.78. Hive was up nicely today, 10.75% to $5.46. No news obviously out there today, so I was a little surprised to see it go up 10.75%. Hut A was up 3.29%. We'll talk about them in a little bit in their news. So they were up to $2.20. Iris Energy was up 3.13% to $5.27. Luxfolio was down 4.23% to 7 cents roughly. Marathon was up 6.03% to $13.71. Mawson was down 10.81% to 67 cents. So it looks like people were able to digest their Q2 report that was published yesterday. I didn't get a chance to get to it all until today, so we'll cover it today, obviously. And then we got Riot was up 1.43% to $7.10. And Solana Holdings was up 1.58% to $3.22. Stronghold was up 1.56 to $1.85. And yes, we talk about Stronghold here in Luxfolio, even though I don't really cover them. But I just want to keep them fresh in my mind. So if something does change with them as far as mining for themselves, increasing miners, anything like that, we may possibly add them in. And if they start providing monthly updates. All right, so that's it for all the miners here. I believe, yep, that's all the miners. Let's take a look at our first story, which is on Bitcoin. So Bitcoin, obviously, we get the options expiry this Friday. So it's a 1 billion options expiry. Here's why holding 20.8K will be critical in this week. So BTC bulls were liquidated in last week's drop to 20,800, meaning even more downside could occur if this level fails ahead of this week's 1 billion options expiry. And that obviously could be a problem. We don't want that to happen. Here's the important parts. So at the start of the week, crypto investors' sentiment worsened after weaker conditions in Chinese real estate markets forced the central bank to reduce its 5-year loan prime rate on August 21. Moreover, Goldman Sachs investment bank strategists stated that inflationary pressure would force the U.S. Federal Reserve to further tighten the economy, which negatively impacts the S&P 500 and would obviously negatively impact as well Bitcoin for that. So regardless of the correlation between stocks and Bitcoin, which is currently running at 80 to 100, investors tend to seek shelter in the U.S. dollar and inflation-protected bonds when they fear crisis on market crash. This movement is known as flight to quality and tends to add selling pressure on all risk markets, including cryptocurrencies. So Bitcoin and the rest of the crypto market is risk on and risk off. So right now we're kind of like in between here. We don't know which way to go. So, but we've obviously seen a huge risk off event happening last week where we, shed a lot of dollars in Bitcoin. So the most bullish bets are above 22,000. Bitcoin's steep correction after failing to break the 25,000 resistance on August 15th surprised bulls because only 12% of the call options for monthly expiry have been placed above 22,000. Thus, Bitcoin bears are better positioned even though they place fewer bets. So it looks like the bears might be winning here. And they go into all the details on the options and what bulls could secure basically 160 million profit on it. And then holding 20,800 is critical, especially after bulls were liquidated in future markets. Bitcoin bulls need to push the price above 22,000 on August 26th to balance the scales and avoid a potential 140 million loss. However, Bitcoin bulls had 210 million worth of leverage long futures positions liquidated on August 18th. That was obviously last week. So they are less inclined to push the price higher in the short term, which was obviously true, and we'll have to see how that plays out. But that is it on Bitcoin right now. So like I said, Bitcoin's probably going to be trading sideways the rest of the week until Friday. Friday might be a pretty crazy day as far as Bitcoin is concerned once we hear from Fed Powell. And then obviously the options expiry is going to, make it even worse possibly for us. So that's Bitcoin right there. Let's take a look at Hut 8 really quick. So Hut 8 partners with ZenLayer to bring on-demand high-performance computing to Web 3.0 and blockchain customers. And here's a takeaway from it. So Hut 8 has signed a partnership with ZenLayer, a massively distributed edge cloud service provider, to bring industry-leading edge computing solutions to Web 3.0, blockchain and enterprise customers. So obviously we know that Hut 8 is going to be moving away from mining, obviously, Ethereum with their GPUs, and they're going more into this high computing space. So the partnership enables Hut 8 customers to instantly deploy and run their applications using ZenLayer Edge Cloud platform. Think of it as think of it as AWS, right? AWS has the same thing where you can spin up machines, virtual machines at any time you want. So think of that as this for Web 3.0, possibly high compute platforms. Users can easily self-provision compute and networking services through APIs or an online console accessible to more than 40 countries in the world. In addition, ZenLayer's customers will now be able to tap into Canadian markets as ZenLayer deploys additional cloud regions with Hut 8 at their Kelowna and Mississauga data centers. Forgive me if I mispronounced those. So that is all that we have on that news, and then we have some comments from Jamie Leverton here and the other CEO of ZenLayer, which don't really matter to us. So this is obviously a good thing. I think this is good that they are diversifying even further. We know possibly that Ethereum is going to be going to proof of stake in September. If that happens, obviously with Hut 8 mining Ethereum, that's no longer be viable for them. They could go into other coins and go into that route, but those are going to be also saturated by other people switching from Ethereum to those coins. So more than likely, the profitability is going to come down on those as the hash rate increases on those networks. So that's why I think this might be a good bet on it. I don't know how much they're going to be making off of it, but maybe we'll get some details. So if it's starting in September, maybe we'll get some details on it come at the end of, what would that be, maybe Q3, possibly Q4 for them. All right, so that's just that. Let's take a look at ZenLayer here just really quick. So ZenLayer is there to improve digital experiences instantly, reach over 85% of the world's internet population in under 25 milliseconds with ZenLayer's Edge Cloud services. So they want to position themselves close to where the users are and build out that way. Instead of like Amazon has, they have a couple of data centers obviously here in the United States, some across in Europe and in Asia and all that, but they're not within, I would say, 500 miles of every consumer possibly that's out there possibly. So you got bare metal, which I think is what they're going to be possibly targeting here with Hut 8. Bare metal is high performance computing plus cloud-like flexibility, active servers in less than 10 minutes. So I think this is kind of the part that they're going for with Hut 8 on it. And if we look at that bare metal cloud, so it's dedicated, instant, and connected. You can improve digital experiences instantly with on-demand servers in more than 40 countries. Get high-performance computing power of bare metal combined with the flexibility of cloud for optimal user experience. So bare metal is basically you're right on that hardware, right? You don't have it virtualized or anything like that. It's on that server, basically. So get high-speed performance with dedicated servers. Take complete control of your data with servers dedicated exclusively to you. Standard configurations offer up to 256 gigabytes of RAM and dual Xeon scalable processors with up to 40 cores. Did not see anything about as far as GPUs on here or anything like that, but I'm sure that might be part of the offering as well. You can see your bare metal cloud is complete control, predictable cost, dedicated performance, secure. Then you can also add on to the public cloud, which is hyperscaling, SaaS API integration, automatic load distribution as well. And you can see what others are using. So ISO Fusion is using it. There's some others. And then here's the interesting part, server configurations. They don't provide any information as far as GPUs, though. So this is just CPU based right now that I'm seeing pricing on. And if you're looking at the max here, it's $889 a month for a dual Intel Xeon Gold 6226R CPU, 16 cores, 2.9 gigahertz, memory 128 to 384 gigabytes, 14 trays of hard drives, RAID configuration, internet 20 gigabytes per second uplink, cloud networking up to 20 gigabytes, also LAN connection. So nothing here about GPUs. So we'll have to wait and see what we find out going into Q3 and Q4 from Hut 8 and possibly Hive as well, as they're going to be possibly going into this as well. Obviously not possibly with ZenLayer, maybe somebody else, or maybe they could do it with ZenLayer too. Who knows? But just wanted to provide that information for you guys. And let's get into Mawson now. And first, I'll start out with the concerns, or at least one of the concerns that I have. So Mawson typically has provided their monthly production updates every month, except right now we're in July. Or no, sorry, we're in August. Gosh, I wish it was still July. We're in August, but they haven't provided their July production updates yet. Usually they've done these in about 15 days of the month starting, the new month starting. And we are at July 22nd right now. So they're way past their normal times when they would do this. So that's a little concerning. And then when we get into the numbers as well, I'll show you the other part that's a little bit concerning as well. So let's get into Mawson here really quick. We'll just go over some of the main points here. So this is obviously for their Q2 second quarter financial results. And here are the highlights. And we'll get into the actual numbers on my spreadsheets here as well. So Q2 22 financial and business highlights. So revenue of 19.8 million. And that is a combination of their hosting and self-mining as well. Non-GAAP EBITDA of 13.7 million and gross profit of 5.4 million. They mined 490 mined Bitcoin. I had them at, I believe it was 483, 82, something like that, which they reported on their monthly production updates. So I don't know if they were off on those just a little bit. After they calculated it all up, they came up with 490 instead of the 483 that I have, which is fine. Mawson has approximately 40,000 ASIC Bitcoin miners deployed across its self-mining and hosting co-locations. 230 megawatt expansion at Georgia, U.S. Facility commences, capable of accommodating up to 7.5 exahash. New 120 megawatt Texas Bitcoin mining facility signed in partnership with JAI Energy and Texas Pacific Land Corporation, capable of accommodating up to 4 exahash. So now we're up to 11.5 exahash. Positive energy load study received for Mawson's second Pennsylvania site in the town of Sharon, with 120 megawatts of capacity capable of accommodating up to another 4 exahash. So now we're up to 15.5 exahash. And here is their 2022, 23, 23 strategic. I think I have them right now at what, 5 point, not even that, I have them at 3 exahash right now, based on what we have as far as miners being provided. So that is obviously huge growth for them. We're talking about, what is that, 11, we were saying 15.5 exahash, and I currently have them at 3 exahash roughly right now with all the miners that they reported on. So it's a huge growth for them. Obviously, the tricky part is going to be financing all the growth and getting miners installed or getting the miners bought. Right now is a good time to be buying miners if you can, because the prices are so down. So we'll have to see how this plays out. All right, 2022, 2023, strategic focus. So expanding existing Bitcoin self-mining operations from the end of July hash rate of 1.7 exahash. At the end of July, I had them, or at the end of June, I had them at 1 exahash. They said average hash rate on that. So there's obviously a pretty big increase on it, but we still don't have any July updates from them as far as what Bitcoins they mined, how many of the Bitcoins they mined, and what was their ending hash rate. So I really don't like it when miners provide average hash rate. I want to know what they were at the end of each month. So 1.7 exahash at the end of the month, to our anticipated 2.3 exahash by Q4 of 2022, and to our anticipated 5.5 exahash in 2023. So that would be an increase of approximately 2.3 exahash from where I have them right now, with all the miners, that are basically reported on or confirmed as being purchased. So that is all of that information. So that's a little. We need obviously more information on how they're going to get to 5.5 exahash by the end of 2023. There might be just their goals, obviously. And then they're planning on expanding Mawson's hosting colocation business from 1.8 exahash online at the end of June to their anticipated 3 exahash by Q4 2022, and to their anticipated 6.5 exahash in 2023. So it looks like they're going to be actually more hosting than self-mining. I would recommend for them to go more the self-hosting route than the hosting. There's just better bang for the buck in self-mining than there is for hosting, obviously. Obviously, there's some other things that go into play with that, with other companies that have mining equipment. They fund a little bit of the expenditure or the capital needed to create those data centers, so that's possibly why they're doing it as well. So we'll have to keep an eye on. All right, let's take a look at the actual numbers here, and we'll call it a day here. Okay, so here are the numbers. So I pulled the numbers obviously from Q2, and this should be Q2 2022 instead of 23. This should be, there we go. Those are fine. Okay. So current assets is a decrease of 3.3 million from Q1. So 2.4, almost 2.5 million. Amounts receivable also increased, which is good. So that's at 5.2 from 1.9, almost 2 million. Trade and other receivables was down a little bit to 4.2 from 5. Total current assets is a little bit less than Q1, about 800,000 or so, to 12.04 million compared to 12.8 million. And total assets went up actually, which is good, to 191 million from 165 million. So that's fine. Current liabilities, trade and other payables was at 13.9 in Q1, 47 million in Q2. So that's a huge increase there. And then current portion of operating lease liability, that's fine. It's about even. This is also even. Borrowings is up a little bit to 19.4 million from 16 million. So total current liabilities is 68 million. This is concerning part here. Total current assets, 12.04 million. Total current liabilities is 68 million. They don't have enough current assets to pay off all their current liabilities. That is concerning, right? Let me zoom this in maybe for you guys so you can see a little better. There we go. Okay, so total liabilities is only 90 million, so it's not that bad. It obviously increased quite substantially here from 62 million in Q1. But like I said, the biggest concern here is total current assets compared to the current liabilities. That's way out of whack. We need to get this under control, I think. All right, I'm pretty sure we need to get that under control. Total stockholder equity is at 101, so about a 3 million decrease, but with total liabilities and stockholder equity has increased to 191 million compared to 165, which is good. Revenue. So revenue for the quarter was 19.7 total. 16.2 was self-mining, 3.5 was hosting, which is a nice increase, obviously, from Q1 compared to 548,000. But they also had much better self-mining, 18.78. So they weren't able to keep above the hash rate increase, price declines, and obviously getting more miners installed. They couldn't keep above it to do better in self-mining this quarter than prior quarter. Cost of sales was 8.4 million in Q1. This current quarter was 14.3 million. That got us down to the basically gross revenue of 5.42 million, which they reported. Prior quarter was about 11 million, looks like. And then when we look at expenses, so general and administrative was 9.4, obviously 3 million increase. That's pretty substantial here for the quarter compared to 6.4. Share-based compensation also increased by about 580,000, 560,000, whatever it is. That it increased. Depreciation went up about 3 million, so total was 26 million compared to 20. And net loss gain income from a period was negative 3.2 million compared to 9.6. So that is actually better, but that was based on change in fair value of derivative assets. Whatever that is. I don't think it's Bitcoin value. I think it's something else. That obviously increased. That helped them out. Obviously, they would have been in a much worse scenario here than they were in Q1. Cost of revenue, this is just their overall, they were negative 33% in Q1 or Q2 versus negative 6.42 in Q1. And then gross profit minus depreciation, we're at 27%. So really low gross profit compared to 56% in Q1. On that one, what else do we have here? Net loss came in at 2.4, and that was based on obviously the 17 million here that was added onto it. Net loss compared in Q1 was 11 million. So obviously a better beat here on that one. So they were down 16 cents per share in Q1. They're only down 3 cents here, which is obviously good. But looking at their debt, I think that's why the stock is coming down today based on that. And then number of shares basically is pretty close to what it was in Q1. So that's fine. I wanted to show you guys this really quick here. So Mawson, we have the results now. So current assets 12.04 million. Current liabilities is 68 million. That's a current ratio of 0.177. Higher is better. You want to be ideally above 1 at least, or close to 1. That way you have enough cash and current assets that you can pay off your current liabilities and be fine with it. We only have, how many companies do we have here? We got Greenwich that's below 1. So Soluna also is below 1. Core Scientific is, well, almost below 1. It is below 1, but just barely on it. So we do have some companies that are below it, and that's obviously not good. Total liabilities is 90 million. Total equity is 101 million. Debt to equity ratio is 0.896. And I believe we want to see this lower. Lower is better. And if we take the current assets minus total current liabilities, we're basically down 78 million in the red on it right now, which isn't obviously good. I mean, we're in the red anyways with total current liabilities of 68 million and current assets. But when we look at everything down, we're down basically 78 million, which isn't good, which puts them in, what is that? 1, 2, 3 in the 4th spot as far as the most indebted, I guess you could say, companies here that we're tracking right now. Sorry, I got to blow my nose here really quick. Sorry about that. Stupid allergies. Yeah, so that's obviously concerning to me. The other thing that's concerning is as well is them not providing their monthly updates. It's like, what are you trying to hide? It doesn't take that long to provide what you mined during the month. What was your ending hash rate? I mean, you should have that on a daily basis anyways. So it's a little concerning on those 2 points right there. All right, but let's take a look at the numbers here anyways. We'll take a look at them. So I was off quite a bit, and I think I know why I was off quite a bit on them. I am at 15 million for the quarter in Q2. They came in at 1878, which was obviously a pretty good number there. I have that right, 1878 revenue. Sorry, I keep jumping back and forth. 1878, that's the wrong one. It should have been 1621. There we go. I pulled the wrong data out. I knew it wasn't that bad, but I was thinking it was pretty bad. Okay, so I was off by 7%. So still pretty bad. I want it to be within 2.5%, but that is based on Bitcoin's price at the end of June, which was at the beginning of June was around 30,000, and then towards the end of June it was down towards like the 20s. So obviously June wasn't a good month, and I used the end of June's price to get my numbers. So I'm still trying to figure out a way to get a more accurate number as far as per daily mining, what the companies could be getting, but we're still not too far off. So we're off by 7.02%. All right, so there is that number. And if we look at their, just kind of some statistics here. So they were at the beginning of June, actually it wasn't June, it was the beginning of April. They were at about 1.3 exahash. they were up to 1.5 exahash, but at the end of June, they reported they were down to basically 1.1 exahash for whatever reason on average. They used the average. So whatever they were mining at the beginning, towards the end, they averaged out at 1.1. It would have been nice to have that data for the actual ending hash rate on it. So the average came in at, I just took the last 3 months, obviously, and I averaged it out. It came out to be 1.3 exahash on average for the quarter. Hash rate obviously decreased for that, and BTC mine per average came in at lower than Q1 at 370 compared to 394, which wasn't good. Cost to mine 1 BTC was also a little bit better here. It was negative 6.7 thousand, I believe, compared to 20,000 in Q1. And then, but the cost to mine 1 BTC minus, if we just take out depreciation, was 29,000 and compared to 18,000. So that's obviously not good. And then we already covered the debt to equity and current ratios, so we're good there. Looking at the numbers here, obviously, so we're taking the current quarter, which is this number here, last 3 quarters of Q1 and then Q4 and Q3 of 2021. We get a total of about 65.5 million. They are currently trading at about a PE of like 1.5 or something like that. And obviously some investors are, I think, a little frightened by the amount of debt that they have, the amount of cash they have or current assets they have. That's obviously a concern that they're going to be diluting. So I think that's why the stock is the way it is right now. They did say that they got up to 1.7, I think it was, or 1.7 exahash at the end in July. So that's obviously going to help them out, but we don't know that data yet. We're still waiting on it. Hopefully they have a week to go before the end of August here. Hopefully they provide some kind of an update on it. That would be really nice. But if we're looking at 50%, I think, which is fair, we're looking at, their growth is pretty good. So if we can get them to 10, I would say maybe $4.54 on the high end. At 75% net income from gross revenue, we're looking at $6.82 really. But that's being really generous here on this part. They really need to get their debt under control and get things figured out. I think that would obviously help with investors' confidence in them. So I can see obviously why they are trading about 1.5 right now compared to some of the other companies that might be trading at a little bit higher multiple right now. All right, so that is it. No further updates from me, and this is actually being recorded pretty late. It's like, what is it? It's actually 10 o'clock at night right now. So by the time I get done with doing this, it's going to be 11 o'clock. I'll probably just wait until the morning to post it for you guys. That way I don't have to stick around until midnight for Google to transcode this video. So I hope you guys enjoyed it. If you did, hit the like button, subscribe. It helps me out tremendously. Give me a thumbs up as well. Spreadsheet, as always, available to my Patreon members. Thank you to everyone there for their support. And I'll see you guys in the next one. Have a great one. I'll see you then.